After you take your time to understand and go through what I'm about to share with you, you shouldn't suffer these problems again, and then you should start seeing some light in your trading career. In today's video, I'm going to tell about 4 biggest mistakes that I see traders making knowingly or unknowingly that has affected their trading career for a long time, and if they don't change that, they're probably going to continue doing that for a long time, and then likelihood of seeing a progress in their career is not guaranteed. Now, trading is very difficult. Don't let anybody lie to you. I have been trading the market for the past 12 years and I've experienced all types of difficulties that comes with the financial market, and I've done so many mistakes that I did not realize, but I was doing these mistakes for the past 1 year, 2 years, sometimes even 5 years before I suddenly started realizing that, wow, these mistakes have been drawing me back. And then from the years on, I've been able to analyze and correct all of those mistakes, and then I'm here to share some of them with you. In fact, mistakes that traders do on a daily basis are dozens, but obviously this video cannot cover all of them, so I'm going to be using this video to cover 4 main ones that I know occur as much as possible and then perhaps really hinders the trader's progress. I'm not going to waste my time talking so much about the other ones, but let's go into the 4 main ones that I have to discuss with you in this video. The number 1 of it is assuming you can win or trade. So many beginner traders come into the financial market and think that they're supposed to always win in trades. In fact, I don't understand why they kind of conceive this perspective, because even in any normal business, there's always some level of loss. But you get beginner traders coming into the market, and or even sometimes even advanced and experienced traders thinking that they're not supposed to take a loss in the market. Because of that, all trades that they're expecting, it's like they are going all out in expectation of making blues. And the moment they see red, they are disengaged, they are confused, and they don't even know how to get themselves back up again, because their whole psychology and mood is conditioned to think that they're supposed to always see blues in the market. They're supposed to always win. It doesn't work like that in the market. The first mistake is that condition your mind from thinking that you're supposed to always win. In fact, correcting that means that you accept that in trading, losses are part of the game. Losses is your cost of doing business in trading. You must accept that it's part of the business. And accepting it also means that when your account is, let's say, $10,000 and then you lose, let's say, $200, which accounts for about 2% of it, you're extremely okay with it. You're not agitated, you're satisfied with it, and you're just moving on to the next trade. So condition your mind in today's video to think that losses are part of the game, and do not expect to never make a loss in trading. You're definitely going to take a loss, and it's just absolutely part of the game. The earlier you change that, the better for your own trading career. So one example that I want to share with you in this same topic is that I had a friend, in fact, we've been very good friends for a long time, whose trading strategy just conditions him to think that he's not supposed to make a loss. In fact, this is a very experienced trader who has more than 12 years experience in the market. He has made a lot of money in the market, and he has lost a lot of money in the market as well. In fact, when he shows you his P&L, you'll likely see either continuous blues, making a lot of money, and suddenly a huge chunk of reds that literally steals all the money. If he has not withdrawn the blues already. So that means that all the time his P&L is either 100% positive or literally negative or zero, because all the time he wants to just see blue. He trades gold intensively, so he literally will scalp gold. He normally does not day trade and scalp and then swing trade. All he does is scalping, right? He takes his mobile phone, he takes his computer, he's just like looking for opportunities to buy with huge lot sizes, not putting any stop loss, and then going all out in expectation to see continuous blues. And the moment he sees red, it's like he does not even know how to manage it, and then for that matter, he's just letting the market to play out. This is because he has programmed his mind to think that he is invisible in the market, he does not take a loss, and it has caused him a huge ruin in the market, even though he has a lot of experience. That's why I'm conditioning you now in this video to think that it is not okay to think you're not supposed to take a loss in the financial market. Now, the second mistake is very simple, but it happens to a lot of people. Not calculating your risk before entering a trade. So many people come into the market and take trades any day, anytime. In fact, we have so many beginner traders. Maybe you're part of a signal community. Maybe you analyze your own trade, right? They have their own trading capital. Let's say either even from a prop firm or their own trading capital, $5,000, $10,000, $1,000 accounts. And then they're just like trading their own analysis or even analysis from a friend, right? They do not have a precondition thought on their risk they are willing to give out. So it means that when the trade comes, let's say they suddenly analyze the market and then they perceive that they want to trade GBP USD. Suddenly they put like 0.1 lot, and then they feel like I'm not enough, I'm not satisfied with this one, let me add 0.5. They put on 0.5. Then their mood and feelings tell them, what if I make a lot more money and then the lot size is so small, let me just put in extra lots. They throw in another 1 lot. Sometimes even go all the way to put like 5 lots on $1,000. Suddenly they realize that if the market is going in their favor, obviously it's all hey and happiness. But the moment the market starts to turn in the opposite direction, then they begin to really panic because they have not pre-anticipated their loss. Right? They just trade because they want to trade, and then when the market turns against them, they are disengaged again, and then it leads to a catastrophic loss of their trading account. You don't want that to happen to you. So avoid this mistake by almost always setting a stop loss, assuming your risk before you enter any trade at all. It doesn't matter what account size you're trading. Never do the mistake of entering a trade without calculating your loss. It will cause your ruin in the market, and you'll be in this market for a long time without making any progress. Now, the third big mistake is that always wanting to trade. Now, if you're part of my community, you know that this is something that we hardly ever fall for. Due to my experience, I've known that if you really want to stay in this game for a long time, one thing that you must avoid is always thinking that you must be trading, right? So many people have trigger fingers. They always want to jump in a trade. If they open their trading account, they are MetaTrader, and then they are not seeing any transaction running, any trade running, they feel like, I'm not a trader today. What's happening? I got to find some trades. You know, I had a footballer friend who was so happy to come into trading, right? And then because I introduced him into trading, and then I taught him all the basics and the advanced thing that he needed to know. And then he loaded his first capital. And then he would almost always text me very early in the morning, Kojo, what's happening today? Must we not trade? Kojo, then in the afternoon, he's going to text me again. In the evening, he's going to text me again. The next day, he's going to text me. I told him, look, trading doesn't really work that way. We trade based on our edge, and our edge is the probability of being right far more than wrong. So it means that if I've seen opportunity in the market and it doesn't align with my strategy, there's no point in having me just trade. So you got to relax. Let me find the best opportunity that align exactly with my strategy, and we're going to make a lot of money. He failed to understand. Sometimes he would behave as if he's understanding, sometimes absolutely not understanding, and then he'll go on to take positions by his own intuition and interest, and then it went on to ruin his account. So you don't want to be that trader that always feels like you must find trades, you must be in trading. Sometimes I trade like 2 times in a week, once in a week, 3 times in a week. Sometimes I even take 5 positions in a week, 10 positions in a week, sometimes 1 position in a week, or absolutely no position at all. And it's absolutely fine. You don't have to always be in a trading position, and then you don't always have to think about the market in a way that there must always be opportunity for you to make money. The moment you learn that early and change that, you're going to save yourself a whole lot of stress, and you're going to improve and progress your trading career far ahead of your game. And the last one that I want to leave to you guys, very important one, we almost always just let it slide, but it's so important, is not allowing your trade to materialize. So many traders don't allow their trades to materialize at all. Talking about allowing your trade to materialize is the fact that, let's say you're a trader whose setup normally ranges from 1:2 risk to reward or 1:3 risk to reward, right? Allowing your trade to materialize means that when you enter the trade and you put your entry, your stop loss, and you take profit, which is like 1:2 ratio, you allow the market to actually float and trade and go hit your take profit, where you actually assume and accumulate the full take profit potential of that trade. It is so important because if you fail to do that, what is going to happen is that you're not going to have a consistent P&L. It means that, let's say you have a trade and then you put on 1:2 risk to reward, and then you enter the trade and you start seeing, let's say 1:2 risk to reward is like you risking 20 pips for 40 pips. And suddenly the trade moves into, let's say, 15 pips, and you feel like, no, what if it reverses? Let me close the trade. Then you close the trade. The moment you close the trade, remember that you did not achieve the full potential of that trade. You enter the next trade, still assuming the 1:2 risk to reward, which is like risking 20 pips for 40 pips, and suddenly that trade doesn't go well and it goes into your opposite direction and hits your stop loss. You're taking a full stop loss of 20 pips, which means that instead of you being up 2% if you're risking 1% per trade, and then being down 1%, which covers up the loss and hence giving you an upward P&L of 1%. Now you're going to actually be down 0.5% because you did not allow the initial trade, which was supposed to fully materialize, and then you're taking the full losses. So hence you're always going to have a P&L that is sinking downwards than going upwards. And that is one mistake that comes with not allowing your trades to fully materialize. It's a mistake that I can account for lack of patience. So if you really want to solve that mistakes, then first thing I would advise you to do is that look into yourself and start adapting patience. Now that is all I have for you today. When it comes to the 4 mistakes or 4 big mistakes that I see so many traders doing, there's so much more I have to share with you in the next couple of weeks, but take this one for the meantime, consume it, absorb it, watch it and rewatch it, share with your friends if you haven't done that already. Subscribe to this channel, click in the link in the description to join the KOJOFOREX Telegram community. Before anything else, smash the like button of this video so that the YouTube algorithm promotes it and reaches out to a lot more traders. Subscribe, like I said, if you haven't done it already. Make sure to connect with me on all social media at KOJOFOREX. Instagram, Twitter, everywhere. My name is KOJOFOREX. Avoid Facebook. I hardly ever respond on Facebook. Now, if you want to be part of my inner circle where I teach basically everything that I've accumulated for the past 12 years and then come also into my close circle group where we have constant communication and chat, and almost always every Sunday we have Sunday weekly analysis where we forge ahead to watch the market for the next couple of weeks and also even trade together, then you want to click in the link in the description to purchase my KOJOFOREX Good Strategy course and also join the inner circle where we're going to be able to analyze together and share my trading experiences with you. If you want to enjoy all these benefits for a lifetime one-time payment and not subsequent being charged for it at a lower discounted price of only $99, click in the link in the description to join my inner circle now. I hope you guys love this content. I'm so excited sharing them with you and I want to share a lot more like that with you. I'll see you guys in the next one. Peace.